My name's Ian Tchacos. I'm Executive Chairman of ADX Energy. ADX Energy is an ASX listed company which focuses on production, exploration and development in Europe. Our core focus area at the moment is Austria.
Ian, thank you very much for the introduction. Nice to meet you.
Likewise.
Executive Chairman, have you got a technical background or a business background?
Yeah, I'm a petroleum engineer by background. I spent most of my career either developing oil and gas fields or trading them.
Okay, and this is the first time that I've come across ADX Energy. Could you, for my benefit, could you give me a kind of how did you come to the company, and what's the kind of the general history of the company?
Yeah, I ran a company in Australia called Nexus Energy. We took that from about a 2 million market cap to a 1.2 billion market cap. That was pre the GFC. After the GFC, I sort of semi-retired and came into ADX as a non-executive chairman. Then we had to let our MD go, and then I stepped in. We had a very nice offshore asset in Tunisia, great gas condensate opportunity, which is really what attracted me to the field.
When was that?
That would have been around 2012. So
a while ago.
Yeah. Look, my assessment was this. This is a really good asset, but unfortunately, with the Arab Spring and the Tunisians became quite intransigent, and we just couldn't revise terms. We had lots of investment interest, but we just couldn't make that happen.
And that was offshore.
That was offshore. It's a 2 to 3 TCF gas condensate field that was discovered by Shell. Would have been ideal for Tunisia because they buy a lot of expensive gas from North Africa, mostly Algeria.
Yeah. And so when was the transition into kind of Central Europe, Austria, Italy and Romania? Yeah,
look, pretty much at the same time, we also found a really good asset offshore Italy. That was an oil redevelopment project, but then Macondo happened and the Italians got into their socialist experiment and they decided no more oil developments offshore, which was a real shame. Italy's, the Nilda field's got about 34 million barrels of oil potential, which is now actually coming back with Maloney. So we're looking like we're going to go back to the 1998 basically legislation, but that's another story. So we were also in Romania. We drilled a well onshore Romania, and our partner there was a company called RAG. We were actually the operator, and they were non-operator. But we got to know RAG, and I don't know if you know, but RAG is basically was a consortium of Mobil and Shell, very technically competent, but then it just got too small for them, their position in Austria, and they sold out to for gas utilities.
Sorry, in Romania or? No,
they got into Romania. That was one of the countries, but RAG, in Austria, you've basically got two companies. OMV, the national oil company of Austria, and they basically dominate the Vienna Basin, and then you've got another major basin called the Malas Basin, which is basically dominated by RAG, which was Mobil and Shell. Okay. Now once Mobil and Shell sold out, these guys got into Hungary, Romania, Ukraine, all these sort of interesting places, but didn't really make a go of it. So their executive board said, look, we don't want to do E&P anymore. And, they went through a sales process. First of all, they tried to get OMV in there. OMV said, look, we'll take the assets, but we don't need the people. They can go to Russia or potentially Oman. Of course, that wouldn't fly with the Austrian authorities, who are pretty kind of socialist in their attitude. Then they tried a German company which had no subsurface experience, and then we got involved and we said, look, you've got a nice little oil field here in the Vienna Basin, which was producing around 250 to 230 barrels a day. So we thought we can get into this country, get some cash flow. So we took over that asset. We also got the operating staff, and also that was kind of the main acquisition part of the deal. But the reason actually RAG preferred us was they were getting out of their exploration portfolio in Upper Austria, which is about 3,500 square kilometres around a lot of oil and gas fields, either depleted or some of them still producing. So their business model had gone from E&P to basically taking Russian gas in summer, storing about 10% of Europe's gas storage, and then in winter, when the gas price had doubled, they were selling gas. Well, not them, it was actually Gazprom selling gas. So they became, if you like, a gas storage utility. But they were making about $1 billion a quarter out of that business. And for that reason, I suppose oil and gas just didn't seem like the right thing for them. And look, for utilities, it's not really, E&P is not really where you want to be. So we were the benefactors of this, because before we came in, we bought the little field in the Vienna Basin, only 70 kilometres from Vienna. And this is a field that had been producing for 50 years. So it was nice, all connected up to the Austrian refinery in Vienna, also into all the gas pipelines. So it was a very neat little project, and it was very low decline. But then we also took on some of the exploration people, and more importantly, we got access to 3,500 square kilometres of 3D seismic, which when they acquired it would have been cost about 100 million euros. And that really got us going in Upper Austria. So we did two things. We got access to the seismic, we got access to their portfolio, we high-graded the portfolio, and then out of, say, 3,500 square kilometres, we took 1,000 square kilometres. We actually submitted our licence application in Austria, and we got that 1,000 square kilometres. But part of the deal was also that we would get access to their infrastructure. And that's probably, one of the most important things, because I think, a lot of companies find themselves some good acreage, drill a successful well, and then can't commercialise.
Okay, so there's a lot of the history, and that's kind of it's taken us from the kind of the historic where you were to where you are today. So if I can read it back to you as far as I understand it, you've got a potential asset in Italy that's just kind of on the back burner, but it might come good.
Well, we actually just last week were informed by the Italian government that we qualified both financially and technically to be able to secure this license.
Okay, reinstate that license.
Yeah.
Okay, so there's Italy, which is bubbling away. We might come back to that. Yeah. You've got some exploration in Romania, but the main activity of the company is in Austria.
Yeah.
And you've got a small producing field in the Vienna Basin, which is close to Vienna.
Yeah.
And you've got the exploration acreage in Upper Austria with some links to infrastructure. Yeah,
well, we've got access agreements. So essentially what we did, we came into Austria in the beginning of 2020, just in time for COVID. Fortunately, we hedged our production, but that's also the time we did the infrastructure arrangements. So, we basically got processing infrastructure to deliver to the refineries under 20 euros per barrel. So that was very attractive.
Sorry, and then are you in the Vienna Basin now, or are you talking Upper Austria?
I'm in Upper Austria, where we have 1,000 square kilometres of acreage.
And it's called Welchow?
Welchow is the most recent discovery. We picked up the acreage in January 2021. In July 2021, we made the decision to drill our first well, and that was the Anshof well. And we made that all discovery in January of 2022.
And that's also in Upper Austria?
That's also in Upper Austria. So you've got, if you think of Upper Austria, those of you that know it, you've got Linz to the north, then you've got Anshof further down, and then you go further south, then you've got Welchow, which is in the foothills of the Alps. But the big advantage of Anshof, and it gives you a bit of an example, because usually the question I get, well, you're in the middle of Europe, it must be really hard to get things done. Now, we drilled Anshof. We've followed up with permitting 2 other wells, and within that core area, which is very close to existing oil and gas production, we've been able to permit drilling both, from a if you like, regulatory perspective as well as environmental perspective, between 4 to 6 months. So that's been, really important, because it's enabled us to get things going really quickly. But if you take the Anshof discovery well, we discovered it in January, we tested it in May, we were producing in October.
And Anshof, is that a gas and condensate
no,
discovery?
Or Eocene oil.
Eocene, and that's the, so I'm getting it. I've looked through your presentation, but I'm just getting the assets in the right place. And so that's a light, sweet oil.
Correct. It's about 33 API. We can basically truck it to, if you like, a rail siding 10 kilometres away. We get it into the Vienna refinery owned by OMV, and we get a net back of about Brent minus 2%. So that's really the other important thing about obviously being in Austria. One is obviously the value of the oil is very high quality oil, and it's well priced. The gas is also very well priced. It's basically sold on TTF, basically the Dutch exchange, because we already sell a small amount of spot from our Vienna Basin fields. That's just solution gas. So, but really our strategy right now is we've discovered an oil field. We produced about 5,000 tonnes, which you're allowed to do when you make a discovery. We did that through just a temporary facility. We shut that in September of this year, and then we installed a permanent facility which can actually go up to 3,000 barrels a day. So now we're licensed for continuous production. So that's
installed and...
That's installed. We installed it and commissioned it, basically 1st of April of this year. So we're back up producing now. So we produce around 250 barrels a day from the Vienna Basin, from the old fields. The new discovery is currently producing at around 140, 150. We're increasing the rate because we're not facilities constrained anymore. And now we're looking to drill a second well in October. We're in the process of contracting a firm rig slot, which will be another well, which will be drilled from the same location of the Anshof discovery, which we expect will intersect a much larger column. And that should be able to deliver somewhere between 300 to 500 barrels a day. And then we've got another slot that we would drill probably by the middle of next year. So our goal is keep producing in the Vienna Basin and then try to build Anshof up to about 1,000 barrels a day over the next 12 months.
Thank you. And the do you have an estimate for the resource and that around that Anshof 2 well?
Look, I mean, right now it's probably you're looking about every well is going to deliver about 1 million barrels, but we're still in the appraisal phase. Yeah. So I don't want to be until we drill the next well. I think probably we'll drill the next 2 wells and then we'll put out a reserves estimate. But
have you done an NPV on say 1 million barrels?
I look at a million barrels is pretty spectacular because effectively, say we're kind of netting now around $82-83 a barrel, not netting, but that's what we're getting per barrel. Our cost of production's around $21 a barrel. Yep. So after royalties and everything else, we're probably still under $40 a barrel. So, 1 million barrels is, worth, 40 million euros. And our cost of drilling is about 4 million to drill and tie in. We've already got the facility that's paid for. Yeah. So, the economics of these things are quite spectacular.
Even if you put a kind of a healthy discount rate on it, you might be looking at 20 million.
Yeah, per well.
Per well, kind of NPV.
Yep.
Your market cap is 47?
Yeah, about 40, 46, 47 Aussie. So we're talking in US. So we're about 35 million US, I suppose. So,
okay.
So look, there's a lot to play for in the oil because obviously, we understand the value of the oil. Getting, building cash flow is important because it enables us to fund our activities. And I guess what differentiates us from a lot of junior oil and gas companies is we generate opportunities ourselves. Yeah. So for argument's sake, we drilled the Welch discovery quite recently. I call it a discovery because we intersected about 450 metres of hydrocarbons and we sampled it and it actually flowed. So we're going to come back and test that. But we had a Canadian company farm into that. They earned 25% by paying back costs about €500,000, and then they funded about €2.5 million of well costs. So they earned 25%. So that left us the balance to pay for ourselves. We've got a company called M&D, have actually farmed into Anshof. So they're funding the next 2 wells.
They're 50%, are they?
They're 60%. So, no, they're 30%. They'll pay 60 to earn 30.
Okay.
So effectively, we get 60% of our well costs covered, and they also paid 1.2 million euros in back costs. So the nice thing for us is it kind of de-risks things through this appraisal phase, and then we get us up and producing at a higher rate, but we have less capital going out the door. So, and then M&D have come into another area within our prospect area where we've got a number of gas prospects we want to drill, and that's kind of in the core area, very close to existing fields.
And that's towards the Vienna Basin, that's further west in Austria.
No, that's actually more towards Salzburg, so it's kind of the opposite way. So Anshof is probably closer to the Vienna Basin, and then as you go further east towards Salzburg, then you're in another area. But all of this is next to, very close to existing infrastructure. So we're looking. So M&D actually came into an area which has about 3 prospects in it. They paid another 450,000 euros to come in, and they'll fund the first 4.5 million of exploration expenditure, which is what we think will be required to drill the next gas prospect. Now, that sort of prospects, in contrast to Welch, looks like, maybe 30 to 50 BCF of gas, very high probability of success. Also, it's basically only 3 or 4 kilometres from an existing discovery where you've got very good, if you like, seismic analogy. And our hope there is that, something like that you could drill and be in production in about a year and a half, which is, for a gas discovery is quite exceptional. But we can do that because the infrastructure is around us and we have access to it.
I might have got this wrong, but you're about 18k tie-in, is that right, from Welch to existing gas?
Welch is a different story. So Welch...
oh, sorry.
I was talking about 2 gas prospects that M&D have farmed into.
Okay.
So we haven't drilled those. We're going to be drilling those. So right now, if you look at the 3 things we're doing, you've got Anshof, which will be a development well that'll be drilled in October. Then we'll drill a new gas exploration prospect, also in Upper Austria, but in the core area, very close to other oil and gas fields. M&D are
paying
funding
2/3 of that.
So they're paying 100% of that to earn 50%. So So Welchow, they fund 60 for 30. That's in Anshof.
Yep.
They're the 2 oil wells that we're going to be drilling in the next 12 months. Yep. The gas exploration, they're funding 100 for 50, as well as paying back cost. Now, Welchow's already been drilled. Now, Welchow is further to the south. If you go onto our website and you look at it, it's like a Christmas card photo. We're in there amongst the pine trees.
I've seen
beautiful valley. And look, that took us 9 months to basically permit. And the reason is we're on the edge of a national park, so we wanted to make sure we did everything right. And we had very good support from the designated authorities in Austria, who clearly want development, especially gas. And so we drilled that. This is a 100 square kilometre surface anticline, the sort of things we drilled in the 60s with surface geology but I guess what's changed through the 60s is since the 60s is we've got very good modelling so we can recreate basins with with what we call section balancing, where you kind of starts with something flat.
You unpack the thrusts.
Yeah, you unpack all the thrusts. And what's really interesting there is we drilled this thing. It was about 1,500 metres, if you like, to top of reservoir, and we actually came in like 50 metres shallow. So with the combination of 2D seismic and if you like, basically surface geology and modelling, we've actually done a really good job of actually mapping this thing to within 50 metres.
And that is the prospect that carries the Gaffney Klein estimate of 640 odd million barrels of oil equivalent, and you've got a best technical estimate of 807, which is with the condensate and the gas.
Yeah, absolutely correct. So that's the main difference, because there was a well drilled on the downthrown side of this thrust, and that was drilled by OMVs in the 80s, and that produced gas with a very high liquids content. No, not exceptionally high, about 40 million barrels per standard cubic feet, and we basically used that numbers because that's what we expected to get in this location. But Gaffney Klein looked at it with less liquids, but still that's even at the downside case, which is about their downside case is about 360 BCF. I mean, that's worth about 300 million euros to us, which is 10 times our market cap. Now the difference is when we drilled this thing, it was probably a 1 in 5. We had about a 20% chance of technical success. We've been able to drill it, and we know we've got 450 metres of hydrocarbons. We've had excellent shows. We had to get through the reservoir because the thing was flowing on us, so we had to basically load up to about 1.1 times the normal mud weight. Still, we got excellent shows. We sampled it, and we got hydrocarbons in a sampler. We created a bit of confusion by saying, we didn't get hydrocarbons in the sampler, but when we got it to surface, we did. And also, obviously, we've got logs, we've got core, and also while we were sampling, this thing decided to flow on us and it flowed to surface. So, we've got a very high degree of confidence, but of course, until you test it, you haven't tested it. So, when we drill this in at the end of March and we announced 450 metres of potential column out, share price double, now it's sort of come back to where it was pre-drill. But in that period, we're also able to raise 13.5 million Aussie.
Well, let's come on to this because this all sounds fantastic. You've got kind of a high NPV on the oil wells. You've got this gas discovery well shower. You've got the farm-ins. It all sounds great. Yeah. But if I look at your share price chart, it's been a rough old ride.
Yeah. Look, I mean, I think it has been rough. We've gone up and down, but sideways. But I don't think, over the last, say, 5 years, no one's really lost money because we've always had underlying value. And I think the big advantage we have is we've got, building production, building cash flow. So that kind of provides underlying value. Now, people are obviously speculating on Welch hour. And, most investors nowadays, particularly at our end of the market, are here for a good time, not a long time. But the pleasing thing is when we raise money now, whereas previously it was mostly, kind of high net worths and professional investors, now it's institutions. So
and you're doing this $13.5 million raise, and you're waiting for the second tranche for the AGM on the 22nd.
Correct. So basically, I mean, our original goal was to raise 5 to 7. But we had interest of over 25 million. So we ended up taking 13.5 because we had two really good potential cornerstone investors that really wanted to take a substantial part of the company.
Where are they from?
One is from Hong Kong and one is from the US. So one will become if you like, a substantial investor at the end of T2. The other one's probably, got about, I'd say about 4%, 4 or 5% of the company.
What's under Aussie rules? What's a disclosable amount? Is it 10%?
No, it's 5.
5%.
Yeah.
So one of them will be over that threshold and will be disclosable.
Correct.
Right.
Yeah. So look, it was important for us to raise money at this time because we're getting into a period where we knew we wouldn't have a lot of activity. Everything would kind of light up again in October. That's when, because one of the things we haven't talked about was when we permitted Welch hour, we made a commitment to the Austrian authorities that we would only operate between the months of this during the exploration phase between 1st of October and the 31st of March. Otherwise, we would have gone ahead and tested the well. But what we were able to do is case the well and basically we got everything done, evaluated and cased by the 31st of March. We're off location. So what we're left there with is a case wellhead, and we'll be able to go back with a workover rig and be able to test this thing.
Is that for optics? Is that so that the hikers and the tourists don't see the trucks driving around?
Yeah, look, it is partially for optics because we are on the edge of a national park. But put it this way, if you like, the evaluation of public interest was, okay, you're going to go there and create a bit of disruption. And then on the other side, we've got this, we're in a tourist area. So is that disruption in the public interest? And of course, when it's an exploration well and it's a 1 in 5 chance of success, then the public interest is public interest divided by 5, right? Yeah. But now it's a discovery. The public interest has gone up very substantially. Yeah. So now, we'll stick, I guess, within that sort of time frame for the evaluation of this well. And by the way, I mean, we sort of intersected hydrocarbons at around 1,400 metres, actually less, 1,300 metres. We drilled down to about 1,750. We were still in hydrocarbons and we decided to call it at that point. So because we were worried that we might get into a unconsolidated reservoir or something like that where we wouldn't be able to properly cement the well.
And you might not have had the top weight.
Correct. So what we did was we RAG casing, we've cemented it, but we can still drill through this, and we think there's probably at least another 1,000 metres of sediments below us. So what we'll do is test this, understand what we've got in terms of hydrocarbon character, productivity, commercial potential, and then we'll go back and deepen the well. But looking forward, what we want to do, and look, the most, as you know, the most environmentally sensitive thing we do in oil and gas is actually testing wells. So once you get to a point where you don't have to test and you just, looking at things like building pipelines and that sort of stuff, obviously it's much easier, for people to kind of accept that.
Yeah.
So look, I think, in Austria, people are very concerned about energy security. There's still 70% of their gas is coming from Russia, and that's coming through Ukraine. And that's if you like, a pipeline agreement that actually expires, in November of this year. So, if either the Ukraine or Russia decide that, we want to cut the taps,
they just need autonomy, really.
Yeah, well, it does. And look, historically, after we made this discovery, we use BP to hedge our oil. So we had a discussion with them. They're obviously very, very interested, as a lot of other traders, is because you had a situation historically where gas would come from Russia into Austria and then be distributed into Italy, Slovakia, Hungary. Now you're trying to get gas back in the other way. So, if you can get a source of, a reasonable source of domestic gas in Austria that's new, then, that's very important.
It's been fascinating. Yeah. I'm afraid we've got a really short slot this
absolutely.
time. I'd love to continue the conversation perhaps another time.
Sure.
Maybe on the next bit of news that comes through. But thank you so much. It's been a really, really useful and interesting introduction.
Pleasure. Great to meet you. Thanks for the questioning.